Well, good afternoon. Happy Friday, July 2nd. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. Interest rates really holding nice ground here this week, actually seeing a little bit of improvement as we round out the end of the week. And that's unexpected because the non-farm payrolls number came out today, and this is the number we've been waiting on all week long. It's a big market mover, an indication of the economy. Is the economy recovering? How much is inflation going to be a concern? And the expectations were we were going to add 706,000 jobs over the past 30 days that are non-farm related. Now, non-farm means we're not including farm workers, obviously. Also, there's a few other categories that are excluded, like government workers. But 706,000 is a pretty big number, and we beat it today by a good margin. Actually added about 850,000 non-farm jobs, beating the number by about 150,000, which is pretty incredible. But simultaneously, the unemployment rate has gone up from 5.6% to 5.9%. That was not expected. So what's causing that? How can we be adding more jobs than we thought we were adding, yet the unemployment rate is going up? And this is the interesting thing about how we report unemployment, or how the Bureau of Labor Statistics reports unemployment. We really only report unemployment for those who are out of work and seeking work. And that last part is the key, right? Because up until this year, we know, just from talking to restaurant owners to small businesses, that getting people to seek jobs, hiring folks, has been a challenge. Matter of fact, I was at a restaurant the other day, and capacity was limited, not because there weren't enough tables. There was a waiting to get into the restaurant, not because there weren't enough tables inside the restaurant, but because there weren't enough servers. And so the problem here has been folks have not been seeking work until now. And now we're starting to see folks try to come back, re-enter the labor force, because those folks are now seeking work, yet are not employed. We're seeing the unemployment rate go up even as the non-farm payrolls number goes up. It's an interesting time in the economy. All that being said, when we get back to focusing on interest rates, well, the mortgage-backed securities market is shrugging this off pretty well. Green days are good days, meaning interest rates are headed lower. The value of the mortgage-backed security is heading up. And you can see mortgage-backed securities not at all deterred by that non-farm payrolls number coming in at about 150,000 over expectations. Perhaps some of this is centered around the employment rate going up. We really don't know for sure yet. It'll be interesting to see how the day finishes out. But as we head into the long holiday weekend, 3-day weekend celebrating Independence Day, it sure is good to see interest rates holding their ground. You can still avail yourself of a really, really aggressive interest rate down in the twos if you're looking for a 30-year fixed, or even the low twos for a 15-year fixed. If I can be of any service to you over the long holiday weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.